Everyone loves to get paid monthly, right? But the problem with many of the high yield funds is NAV erosion. Your income goes up, but your portfolio value goes down. Today, I'll show you how to build a 5 ETF portfolio that pays you monthly, keeps your capital intact, and sets you up for long-term success. Let's get started. Hey, welcome back to the channel. I'm Doug, the retirement guy with the monthly ETFs. That's right. We're going to go with over 5 monthly dividend ETFs in a portfolio that pays you monthly with no NAV erosion. We went through, researched a little over 400 different funds to make sure that we fit 5 that were perfectly fit together. Before we get into that, I got to be a shout out to all of those subscribers. If you're not a subscriber to the channel, don't be afraid to hit that subscribe button and that bell notification so that you don't miss a single one of our videos. All we're here trying to do is help put money in your pocket. Let's get into today's video. Notice to all viewers, past performance does not guarantee future results. The information provided in this video is for educational and informational purposes only. So if you need any financial help, always contact a financial advisor. First up, it's TSPY. It's a covered call strategy on the S&P 500. What's unique here is it aims to generate monthly income without giving up too much upside. Think of it as collecting rent on your stock holdings. It's steady, it's reliable, and it does things that a lot of other companies don't do. So this one here writes daily out of the money calls using 0 DTE options. It also holds long exposure to the S&P 500. This fund was launched in August 14th of 2024, so we really have a full year under our belts to make sure that this system works the best across the board. When we take a look at the fund as a whole, the year-to-date growth is 1.92. Even though we had the huge drop off in April 2nd, which everyone will have, this thing came out roaring back to where it was supposed to be right after that. So this is why we show that there's really no real NAV loss in any way, shape, or form on this fund. When we look at the total growth over the expectancy or the 1 year of the fund that it's been out, this thing is showing a 4.52% total growth rate. So we have a lot of exposure that we're going to gain growth on this particular fund, and does a very good job at it. So when we take a look now at the dividend and the income side of this thing, you can show you we have a dividend yield of 13.60% and an annual dividend of 3.45 in dollars. The frequency, as we said, is monthly. So this gives us an average of 28 cents per share per month across the board. So when we look at this, I'm looking for consistency. I'm looking for standards that I can basically calculate out how much a month we're going to get, have a real close basis to it. And even though you see these lines bouncing around quite a bit, you got to look at the actual numbers. They're bouncing between that as low as 27 and 30 cents. So there's really only a 3-cent gap in any one of these lines across the board. So it's very, very easy to adjust and set up a budget and know what you're going to get into each and every month. So this is why we put this thing as a great anchor for your portfolio. And so that's where we'll put this in, is our number 5 slot as our anchor on our team. The next fund is GPIX, which is Goldman Sachs S&P 500 Premium Income ETF. Now this fund takes the rules-based approach to the S&P 500, generating cash flow while maintaining exposure to the growth stocks. For investors worried about tech volatility, GPIX provides income while smoothing out the ride. So really what they're doing here is they're combining equity investments with call strategies so the fund can seek out, generate stable income while offering the growth and the capital growth across the board. Now, GPX was launched in October 24 of 2023, so we have almost 2 full seasons or 2 full years onto this fund. The growth rate that we look at here, is year to date 5.39%, which is not bad when you take a look at what happened in April. And then we turn around with the growth rate over the maximum period of time, we're at 33.23%. So this fund definitely knows how to grow your money and how to maintain your money in good times, bad times, and across the board. The question now is going to come into, does it generate income? So let's take a look at this now. And GPIX definitely has done a decent job across the board. If you look at where it started at and where it's at today, we basically have been bouncing between that 32 cents to about $3 or about 37 cents. Now it pays an 8% dividend rate. The annual dividend is 4.16 in dollars. Frequency is monthly, and the average dividend is 35 cents a month. So you can see we can make a standard budget, knowing that if we do 35 cents, it's going to come into there almost on a regular basis. Now, what makes this thing so great? Well, take a look at what they've done. They've really covered the S&P 500 in their sector allocation. We're looking at technology at 33%, financials 11%, consumer discretion 10%, healthcare 8.95%. So that makes up the chunk of the fund, but they are spread across the entire board so that if any one sector takes off, they have the ability to generate the growth and then, of course, income from the covered calls. So this one here is why I think this is another strong piece to put in this portfolio to make sure that we can cover what we need done. Our third fund is QQQI. Now, you've seen this one a lot. This is the NASDAQ 100 High Income ETF. This one tracks the NASDAQ with overlays and income strategy to deliver monthly payouts. Unlike some other funds that burn through NAV, QQQI is designed to protect long-term value while still giving you a sweet monthly cash flow. And they do this again through covered calls, pursuing the potential equity growth in tax-efficient ways. That's a whole nother avenue that we haven't even talked about yet, is how these guys handle their taxes, so you can be comfortable with that down the road. This one was January of 2024, and here's the exciting part. This one's had a 4.44% growth year to date, including the April drop-off. This thing is still recovered and gotten to the 4.44%. Now take a look at the life expectancy of the fund so far. So this is, realistically a little over a year and 9 months, 33.23% growth from QQQI. Very, very strong, solid numbers. Now I know growth is a very big part, but if we can look at this and see, can we get the actual income out of it, would make it even bonus on this. And that's what we find from QQQI. This thing pays a 13.43% dividend yield, paid out $7.33 over the past 12 months. That's an average of 61 cents per month. Now we take a look at this, and again, very flat. You're bouncing between the 60 and the 65 cent range all the way through. The only time they've had any major drop-off was in right after April, and that was all because of the volatility from that period of time. When we look at the allocations, we see the technology is doing extremely strong at 51% of the fund. Communication services 11.98, consumer discretion 11.72. So this is totally different from GPIX. So it kind of gives you a nice mixture of the two that you can combine together. Sure, you're going to have more technology than you probably want out of two funds, but this is what's driving the economy today, is your technology, and that's what's holding you tight and making this thing work. So this is why we think this is our third and probably a great fund, because it gives us both cash and growth. Our fourth fund is GPIQ, which is the Goldman Sachs NASDAQ 100 Premium Income Exchange Traded Fund. Now, the ETF blends income strategies with defensive positions to make sure your portfolio isn't just all about yield. It also is about preservation. And that's the key to avoiding NAV erosion over time. So they want to make sure they're working in both areas, not just, covering and increasing your income and giving your big yield. They want to make sure that we're covering the capital growth and that we're giving you stable income on a regular basis. When we look at this, they have a 6.72 year-to-date growth and a 34.71% overall. This thing came out in October of 23, so we're almost close to 2 years developed into this fund. So Goldman Sachs has done a great job working this one through. When we take a look at the income side of it, it's exactly what I expected to see. We have a solid, decent income coming through at 9.68% annual dividend. It's not going to be in the double digits. It's not going to be the 13, 14% because it's giving you that more protection on the downward side. So this thing bounces between that 45 cents and about 35 cents. An average comes into at 42 cents average dividend. Annually gave you $5.05. So the sector that you look into, again, we're dealing with technology because you're in the NASDAQ series. You're looking at consumer discretionary and consumer services. Then we get into consumer staples. So everything is really driven by what are the high volume items out in the marketplace today. So they do a great job in their sectors, combining everything together. Now our final fund is going to be DIVO. This is Amplified CWP Enhanced Dividend Income ETF. This is a dividend growth and option income ETF. It focuses on high quality companies with strong dividend histories while layering on option strategies for monthly income. It's one of the most respected funds in the space for a reason. And when you take a look at the return on the growth in just the year to date at 9.78. Now you got to remember this fund came out in December of 2016. So we're almost 9 years into this thing, and it's had a growth of 47.89% overall. So this fund is extremely strong in what it does. Now it provides income selected from select S&P 500 index overlaid with a technical call strategy across the board. So they do a very good call strategy, generating as much growth as they can. Now, when we take a look at the income side of this one, it's going to be definitely down because they give you a lot of protection of your yield. So when you get to it, 4.51% dividend yield, a $2 annual dividend payout, that gives you about an average of 16 cents per month. You can see the chart. It runs pretty much between 18 and 14 cents. So very steady across the board, working with a 16 cents. When we take a look at this, though, this is what you want to look at. It's the total performance package coming out of DIVO just over, from 1 month to year to date to 5 years. It is so steady. You can set a hat to it. 13.36, including dividends. In the year to date, 14.04 year in 1 year, 13.65 over 5 years, and 12.45 since inception. So this thing does exactly what you expect it to do, is just generate income or generate growth with some income over and over and over. And how do they do it? And why is this one part of our portfolio? It's simple. Look at the breakdown. Look at the sector allocations. Nothing is super strong. You have financials at 24%. You have technology at 15%. Industrial at 12%. Consumer discretionary at 11%. Other is going to be 10%. 10% is other. So what we're looking at here is this is why DIVO fits so well with the entire portfolio that we've done, is you have all different segments covered. Everything that we've done has different segments covered across the board. And DIVO shows that it fits and fills in all the gaps that we have left over. So if you're serious about building wealth while getting paid monthly, these 5 ETF strategy is a game changer. Don't forget to hit the like button, the subscribe, and share the video with someone who you love that loves dividends as much as we do. Until next time, happy investing.